Hey, welcome back, traders. Tough times in the markets right now. Everything got hammered yesterday, except for AMC, closing the day green, 2.69%. Here we are on TradingView. See for yourselves, well over $10. Same can't be said for the S&P, closing down a whole 2% on the day, as well as the Dow, 1.99%. We're seeing red across the board. We're seeing the cycle of money from overbought assets to oversold. It's all Elon's fault. No, I'm just kidding. This is just a little news article. Bitcoin crashes as Elon announces Tesla cars can no longer be bought with crypto. Very interesting. This may be the beginning of a storm brewing up. It's not going to be pretty. Buckle up. We need to button down the hatches on the ship. Button down the deck. So here's the AMC day trading chart. Very interesting. For the first time in quite a while, it held the day above $10 here all day long. Not only that, it's been stair-stepping. I don't expect it to hold on the day trading side of things, but the lower support's going to be this $10 psychological once more. Don't be surprised if we do see that again. Maybe some more stops will get hit. Stop losses getting triggered, paper hands folding, and then a push higher. It's moving so fast right now with the markets being closed, so I'm recording this. It's tough to say. But on the short-term side of things, we are looking at some higher targets here, closer to $11.20. It put in this yellow horizontal trend line resistance. That's coming from way back. So there's reason for it to have a little bit of a struggle there, a little halt on this yellow trend line. So there's a good chance it's going to push up to that trend line first, towards 11.25, and then come down for continuation on a real breakout. It's going to take a little time here, most likely. Not expecting this to happen overnight. And that's all I'm going to show you about the AMC chart today, because everything's well on track and there's some other important stuff to talk about. So GameStop's not holding up too well. Saw a tiny bounce in this little blue accumulation zone. I don't think it's gonna hold at this point. Even if it does, it's gonna have trouble up here towards $170 on GameStop. It's gonna be a hard resistance. It's a good chance it'll get rejected from there as well on the short-term side of things. And that will require further analysis, but currently it's trending down pretty hard. And we'll see, okay? I'm expecting it to continue at this point, but there is some hope right now because of the cycling of those other overbought assets. So if people are taking profits out of those and moving them into AMC and GameStop, speculatively, of course, nonetheless, it's getting closer and closer to testing the real wedge pattern, but we're not quite there yet. So it's got some time here still. I think it may take another week or two to really have some more developments. Otherwise, it's looking to drop back towards $100 or lower. That's where the real buy box is, in purple, way down here. Patience may pay off on that entry. Now, for electric vehicle sector, well, the Colonial Pipeline sparks panic buying of oil and gas. leaving more than 1,000 gas stations across several states without fuel. So that's bad for the oil industry. It's great for electric vehicles. We'll see if this has any effect on CCIV Bay, because it's currently holding just perfectly at the 1777 support line in orange dashed here. Hopefully it does bounce from there. Okay, if it doesn't, it could be a rough little dip here. Maybe one more bear trap before some stronger bullish divergence comes through on the daily chart or the 4-hour chart. It's not really there yet, not quite identifiable. It is identifiable in this zone, in this time frame throughout the previous week. There is going to be bullish divergence here. I'll draw it out for you real quick, like so. And this is just on a 1-hour chart right now, but it is also on the 2-hour, and it may even be on the 4-hour. No, so it's not on the 4-hour yet, but potentially in the future we will see that, because it is attempting to put bullish divergence on the 4-hour based off this previous low. Now for the US dollar, well, we have to talk about this because it's having a major effect on the markets right now. A big reason why the Dow and the S&P are down so much today is not because they're down necessarily, it's actually because the US dollar value is increasing rapidly. So this is the day's candle in green here. If I go to a day trading chart, it's pretty apparent how fast this is pumping. It's moving very quickly in a recovery formation here, and over the midterm it is looking to go higher here. It's tough to say how high, how long a real recovery on the US dollar could take here, but thereafter I am anticipating it to further decline throughout the next 3 to 5 years. So instead of showing you some of our entry plays, because they haven't moved very much, I'm going to show you a couple things to be careful of. These PLTR, we were bearish on it from this resistance at 34 a long time ago. This only came down since we reevaluated it in this area, further becoming bearish once more. Instead of anticipating a breakout, we saw that bearish push down as well, another leg down here, and it may not be quite done yet. So even if this bounces a little bit on the intraday, it's currently looking like it could drop quite a bit from this point still. It could come a whole 50% lower, no BS. Come all the way down to this low or lower. We've seen some charts that have gone lower than this. Be very weary of entering something like this right now, especially with all that uncertainty. It's gotta get above 2240. Let's call it 2277 for really any kind of greater swing trade signal here on an entry. Same with MVIS. It's been brutal. So I'm glad that we remain bearish on this chart as well, but it's really confused a lot of people with all this chop up and down. So let me simplify it for you. There was massive bearish divergence coming through on these highs. That led into a big sell-off. It's currently sitting at this long-term moving average. I would not count on this to hold. It might, but this is one of those ones that's pretty risky, because if it doesn't hold, it has a long way to go to the downside. Potentially very, very far. It could go 50 to 80% red on microvision still. From this point, it really could. So the hot beverage area, the midterm support's going to be down in this blue box at around 570, the very bottom of that there. This thing's moving so fast, it might not take very long. Be ready for that just in case. You don't want to be heavily leveraged right here. And to wrap things up with a bang, speaking of hot beverages, SPCE Virgin Galactic dipped ever so perfectly within our hot beverage here. This was a previous prediction, and that is where the price came down to. It ended up right inside of the coffee cup here. It is looking to bounce out of the very bottom of this gold box. Somehow we perfectly called the bottom on that. Hopefully we see a push up throughout the end of the month. Thanks so much for watching. I hope you have an awesome day. Take care. Happy trading.